Welcome to Milk Market Tidbit for the February class and component numbers that the USDA released on Wednesday. This is Dr. Lawrence Jones, and I'm recording this on Friday afternoon, March the 7th. So the National Dairy Sales Report came out on the 5th, which did give us the final numbers, and so this is how they actually kind of came together. What was interesting about this, they came in at 2018 for Class 3, and the trade was pretty high all the way through, 2035 down to 2022, so they missed that all the way through. And at the same time, they missed Class 4, came in at 1990, and they had it at 1978. So the trade was a bit low on that. So one of the things that did kind of surprise me was the volume of blocks was under 10 million. So that probably brought that price down just a little bit. Now, I've been telling you how these prices are going to change with the new federal orders, and so I changed this just a little bit. But here's the announced price. Here's what it will be after June and then after December. But what I added in here was the Class 1 differential, because like in the Northeast, we're going to go from 325 up to 510. So there's going to be a significant increase in Class 1 price. So what I've got here are the proportions of each, 30% Class 1, 24 Class 2 on down the line. So anyway, at the short time after June, we're going to be down to about 43 cents, but with this added Class 1 differential, we're going to end up pretty even once the numbers come out in December. And this is a map I got from DFA as to how the new Class 1 differential is looking. Again, a lot of these or over 5, over 6, over 7 in Florida. So these are going to go up fairly significantly. Class 1 base has been known for a while. This is what will be added to for that Class 1 mover. Came in at 21.27. That was up 89 cents. Class 3 came in at 2018. It was down 16 cents off of our high that we had at 23.34. But again, much better than we had just about last April at 15.50. At this point, these are trailing off, but I think there's definitely a tariff effect in these in here. So just kind of get through some of this, we might see a little bit of an increase in Class 3. Let's look at how this kind of all came together. There was some carry in the market. That's strong. That should say like 48 cents from 6 months earlier. And so again, if we look at this carry, we went through this long period of bearish market. And now we have some slight carry, but look at the noise in this contract. I mean, that was just crazy. And so if we look at our emotion index, it's off the chart high. So we had a standard deviation of those last few weeks of 0.4. We've had some months as low as, 0.18. So twice the standard deviation of normal. Fat prices are coming down with butter. We're actually at our low, down 13 cents from last month at 282. And again, I keep showing you this almost on every video. The fat percentages is going up. If we make more fat, we're going to have kind of a problem with butter prices, I think. Protein came up 21 cents to 20.53, and that was off of a high of 3.92 there for a while. But cheese prices have just kind of been coming down, but much, much better than our low of 83 cents back here when we were under $1. So it looks like right now, we're going to be, under that 250 kind of number probably for the first 6 months of 2025. Other solids are under a lot of pressure due to whey. We came down 6 cents, which is a huge amount on 54 cents. So it came down to 48 cents. And this is kind of trailing off. Class 4 just came down a penny at 20.73. Our high was 22.29, and so it's come off of that. But again, our low was 19.85, and it really went up from there. This is how the futures ended up today, just a few minutes ago. So Class 4 is going to be above Class 3. There might be a little bit of depooling here in April because this got to $1 difference here. And if we look at the Class 1 mover all the way through here, the higher of is going to be better than the average plus 74. So that does look like that was a bad decision in these federal milk marketing changes. When we get this data, it's always time to look at the forecast for 2025. Now the blend price all the way up through June is 50-50. And then after June, I put it at 60-40, 40-60, depending on whether Class 3 or Class 4 is higher. Right now, we're looking at $1.24 off of last year. And I think right now I'm more or less between $1 and $1.50, I think, where the prices are going to come in compared to 2024. So a little bit lower than last year. But this is a really interesting. So the green line here is the spot market plus 40. And again, these changes here are the new federal order rules. But look at this difference here between the futures and what that spot market is suggesting for September. Just a significant difference. So what that is saying is the trade is expecting blocks to go up significantly. Because again, starting in June, it's only the blocks, not blocks plus barrels. So this kind of action is simply saying that they think blocks are really going to become strong. Otherwise, we got to be thinking about kind of protecting these future prices in here because they are very, very strong relative to the spot market at this point. Now, DFA was saying they think that June could be as low as 16. I'm not sure I'm in that camp at this moment, but there is some possibilities here. So we had the global dairy trade, the classic component numbers, and we've already seen the dairy exports and dairy products. It's always interesting when we kind of look at what the next milk market tidbit will be, and it will probably be the milk production report on the 21st. That simply says that for the next 14 days, we're in what I call the dark zone and basically have no information. So it's going to be interesting to see how the trade deals with that. Just as a side note, I did forget that the statistical uniform prices will be coming out starting the 12th through the 14th. So I'll probably get you something on those, which will be before the milk production report.